If you are sitting on a 3% mortgage rate right now, waiting for rates to fall back to 5 before you make your next move, I need you to hear something. That wait might cost you a lot more than the rate ever will. I have said this to more than one client in the last few months, sitting across the table from someone who owns a home they have completely outgrown, who can absolutely afford the next one, and who is still frozen. Not because the numbers do not work, because the number on their current mortgage feels too good to give up.
I'm Chruszhet Hydron. I've lived in Las Vegas for over 40 years. Welcome to my channel, where local insight meets real guidance.
I'm Chruszhet, and I've spent my career as a knowledge broker here in Lake Las Vegas, helping Henderson and Las Vegas families make their next move with clear eyes instead of fear. You already own your home, your rate starts with a 2 or a 3, and part of you is holding out, maybe for rates to drop, and maybe for something else you have been hearing about, a bill in Congress that would let you take your rate with you. I am going to walk through both of those with you and honestly tell you exactly what I'm telling my own clients to do. So there is a name for what is happening to you. It is called the lock-in effect, and it is one of the biggest forces shaping the housing market right now, especially for move-up buyers like you. Here is what it looks like in plain terms. You bought or refinanced when rates were low, maybe 2.5%, maybe 3.25%. Today's rates sit meaningfully higher. So when you think about moving, your brain runs one comparison. My rate today versus the rate I would get tomorrow, and that comparison feels like a loss. But that is the wrong comparison. You are not choosing between keeping your low rate and getting a higher one in a vacuum. You are choosing between staying in a home that no longer fits your family and moving into one that does, at whatever the real full cost of that move actually is. Those are different decisions, and only one of them is really about the interest rate. I want to be clear, this fear is not irrational. If your payment would jump meaningfully, that deserves real thought. What I am pushing back on is not caution, it is paralysis. Refusing to even run the numbers because the rate alone feels bad. So let's talk about what waiting actually costs, because this is the part almost nobody walks you through. While you wait for the right rate, home prices in Henderson are not frozen. As of this summer, the median home price here sits at $540,000, up 5.5% over the last year. Let me put real numbers on this because this is where it gets uncomfortable. Now, before I do, I want to be upfront. This is an example, not a quote. Your actual rate depends on your credit score, your debt to income ratio, your down payment, and a handful of other factors that are specific to you. And rates themselves change daily, sometimes more than once a day. So use this to understand the concept, not as a number you will actually get. Say you buy that $540,000 home today with 20% down. At today's rate, around 6 2/3%, your principal and interest payment is roughly $2,775 a month. Now, say you wait 2 years hoping rates fall to 5%. If Henderson keeps appreciating at that same 5.5% a year, that home is no longer $540,000. It is closer to $600,000. That's almost $60,000 more and about $12,000 more you would need just for your down payment. Here is the part that surprises people. Even if your 5% rate actually shows up on that higher price, your payment lands around $2,575 a month, only about $200 less than what you would pay today, and that is the best case. If rates have not dropped that far in 2 years and you are still financing at something close to today's rate, you are not saving $200 a month, you are paying $300 more on a loan that is nearly $50,000 bigger. That is the waiting tax. It does not show up as a single bill, it shows up as a bigger loan, a bigger down payment, and a bet on a rate that has not happened yet. Again, your numbers will not look exactly like mine. That is what a lender is for, running your actual credit, your actual income, and your actual scenario. But the pattern holds. The longer you wait, the more it can cost you, no matter whose numbers you use. There is a second cost too, staying. I talk to families working from a kitchen table because there is no office, kids sharing a room who are old enough that they should not be, parents who need space for an aging parent to move in and just do not have it. That is not a spreadsheet problem. It does not pause pause while you wait for a headline to change. And here is a third piece that most people never factor in. If rates do eventually drop toward the number you are waiting for, you will not be the only one who moves. Every buyer who has been frozen for the same reason moves at the same time. More buyers competing for the same homes usually means multiple offers again and prices moving up faster than they are moving today. So the savings you are protecting by waiting on the rate could get eaten by what you paid to win the house. Waiting on a rate number nobody can guarantee is not a strategy. It is a bet, and you would be betting your family's next few years on it. Okay, now maybe you're just not waiting on rates. Maybe you have heard something about a bill that would let you take your current mortgage rate with you to your next house. Let's walk through exactly what that is, because there is a lot of confusion out there. It is called the MOVE Act, House Resolution 10028, introduced in Congress on August 3rd, 2026, by Representative Tom Keene Jr. of New Jersey. The idea is something called collateral substitution. In plain English, it would let a homeowner transfer their existing rate, their term, and remaining loan balance onto a new home instead of paying off the old loan and starting over at today's rate. Here's something a lot of people do not realize. This already exists for some loans, like the FHA, VA, and USDA loans are assumable today. That is roughly a quarter of all mortgages out there. What the MOVE Act targets is the other 3/4, the conventional loans backed by Fannie Mae and Freddie Mac, which currently are not portable at all. The bill would require Fannie and Freddie to start purchasing and securitizing these portable loans within 180 days of it becoming law. Now for the part that actually matters most to your decision today. This bill has not passed. As of right now, it is sitting in the House Committee on Financial Services, where it was referred to the same day it was introduced. It still needs to clear that committee, pass the full House, pass the Senate, and be signed into law before any of it takes effect. Even supporters of the bill acknowledge that process could take years, not months. And even if it does pass, there are real limits worth knowing. The transfer window in the bill is only 90 days after you sell your original home. Lenders are not required to offer it. The bill only guarantees a buyer exists on a secondary market. And the bill does not address how you would finance the difference if your next home costs more than your current one, which, if you are a move-up buyer, it almost certainly will. So, here is what I tell my clients about this. It is worth knowing about, and it is worth watching, but it is not something to build your moving timeline around. Making a real decision about your family's home based on a bill that has not yet cleared its first committee vote is not a plan. It is a hope layered on top of another hope. So between waiting for rates and waiting for legislation, what do I actually tell you to do? Marry the house, date the rate. That means you commit to the home that fits your life today, and you treat the rate as something you can revisit later, because you can. If rates drop after you buy, you refinance. You get the home now, and you keep the door open on the rate later, without needing Congress to act first. There are tools available right now that you probably do not realize exist. We have rate buydowns where you or the seller pay a cost upfront to lower your rate for the first few years. Seller concessions, which are more common in today's Henderson market than people assume. These are not tricks. There are legitimate ways to soften the exact concern that is keeping you frozen. And if you are worried about buying before you sell, HELOCs, which is the home equity line of credit, and bridge financing let you tap in the equity you already have to move on to your next home without waiting for your current one to close first. Again, I am not a loan officer, so I'm not the one running rate tools or underwriting numbers for you, but if any of this is something you want to explore, I can connect you with the lender that I trust who can walk you through exactly what you would qualify for. You would probably be surprised how much flexibility exists once you actually look at your numbers together instead of guessing from the outside. Okay, so let me tell you about two buyers I worked with, because this is not theoretical for me. One family decided to wait. They had outgrown their home. They knew it, but the rate difference felt like too much to accept. So they told themselves they would revisit it once rates come down. Another family in a very similar situation and position moved forward. They used a rate buy down to soften the first few years and treated the rate as something to refinance down the road if it would improve. When we submitted the offer, we asked the seller to provide seller concessions so that my buyer could apply it towards their rate buy down. So the family that moved forward has been living in a home that actually fits their life for a while now. The family that waited is still waiting. Still cramped, still telling themselves the same thing they told themselves before. That is not me judging their choice. That is me showing you what the wait actually costs when you watch it play out. Okay, so here's what I want you to take from this. The perfect rate is not a plan, and neither is a bill that has not made it out of committee. Hope is not a strategy for a decision this important. The right home at the right time for your life with a rate you can manage today and revisit tomorrow will almost always be waiting on a number or a law that nobody can promise you. If you are a homeowner here in Henderson or Las Vegas sitting on this exact decision right now, reach out to me. Let's sit down and run your actual numbers, your home, your options, not the general internet version of this conversation. That is exactly what I'm here for. I live right here in Lake Las Vegas myself, and I would love nothing more than to help you find your next home in this community. But my clients buy all over the valley, primary homes and investment properties both, and I have lived here for over 40 years. So wherever you are looking, I know this valley well enough to help you do it right. If this helps you see your situation differently, hit the subscribe button because I break down decisions exactly like this every single week for this market. And next week, I'm covering where in this valley, I am helping my clients buy rental properties right now and the rentability and demographic trends driving those decisions. I don't sell houses. I help people find a home that fits their lifestyle at that moment. All right, well, that's it for now. I'll see you on the next video.